Hello, this is Misha from Forex again with a very short guide of do and don'ts of placing trend lines, and also going to chat about the nuances of Fibonacci retracements. So I'm here just opened a random chart, Euro British Pound 1 hour chart, just to show some things regarding trend lines. So trend lines act as support and resistance. So how do you place trend lines? Generally, you place trend lines from the beginning of a move, and you will use the first swing point to connect the line. So for example, here the move started here, this downtrend. Obviously this is now in hindsight, but as this bounce happened, you could already place this trend line here to anticipate further bounces from this area. So as this happened, let me just connect this line here to explain what I mean. I'm just going to connect it here. So from the start of a move, we have our first bounce, and lo and behold, it actually sort of tested this trend line. Generally, the third bounce confirms the trend line. You place it with the second, and the third bounce confirms it. I don't use trend lines that often unless they're very clear and generally only on larger time frames. But for me, the third bounce is already okay. So if there's information coming into play around the third bounce, then I could use that to trade also, especially in confluence with other price action signals. So for example, if this were an area, and it actually does look okay, this is now a very short time frame, but let's just assume this was a support and resistance area, and this trend line was up, and we saw a trade setup occurring around what am I doing now? Sorry, yeah, around this area here. So now it's a smaller time frame, or imagine this is the daily chart and we see a 4-hour indecision candle sort of setting up here. Now we're working with confluence. We know there's a support and resistance area indicating that sellers are lurking here in this area and just waiting to pounce at the market. And now we have a trend line also after this bounce to show that there's confluence. There are two tools that show the same thing, that we might find a reversal here. And honestly, I really didn't pick this chart now, cherry pick it. This is just how it is. And we actually did see a reversal here. Obviously it could have been completely different and just shot through here. Okay, but another nuance of trend lines, let me just delete these lines here, is as soon as they're broken here, this is sort of fine, it did pierce through, but as soon as, for example, here it closed above the trend line and made a new high, I would adjust this trend line to the new high and use it like that going forward. Now going forward in time, we didn't really see another bounce, and that's fine, and that's why I said I don't use trend lines that much unless they're very obvious. Here, as soon as it closes the trend line, let me just pull this a bit further. As soon as it closes over and doesn't go under the trend line again, I would simply delete it. For me, there's not much. Some people use the trend line going forward also now as support. I generally don't. I generally just take the trend line off. Okay, another nuance is I would only start the trend line from the high of a move, at least recent high. So I would not draw the trend line here and hope it would work if I clearly see there's a higher bounce a bit further up, if that makes any sense. Alright, so then here another trend line that we can pull just to show like some things. Here this first bounce, it did touch it, but I would not draw the trend line like this, because you can clearly see that here price did sort of bounce back here, and that sort of aligns. That is totally fine. You could even actually consider putting it around here, because here you kind of have a body bounce, here you have another wick bounce. So consider it as an area also. It's not set in stone. However, trend lines are generally more exact than horizontal support and resistance areas. Alright, so that's all I wanted to mention with trend lines. Place them from swing highs, don't place them in the middle of a move. That just doesn't make that much sense. Like this, if you see higher prices here, I don't generally, some people do use it like this, I really don't. I only use the swing points. So, for example, I would probably have this trend line here, and look at price action as we come to a third bounce. I would probably have one here because it does look like it's sort of having like forming this triangle formation. We'd probably see a breakout in either direction. I don't trade breakouts that much, but especially if it's in confluence with other signals, we might. For example, quickly here we see this could be actually an area of support and resistance, and we're right in the middle of it, and it's probably going to range around here and break out in either direction. So we could look at the information here, but we're not going to do that now. Alright, so Fibonacci levels, I only use the 50 and 618 levels as retracements. So how do you place them? When we have a strong move, alright, so one swift move, and we see that price is retracing from this move, we can use Fibonacci to anticipate. It's not always set in stone, but it does work quite well, how far the retracement will be, and use that area as support and resistance. I'll talk about why I place it here now and not here in a second. So placing this Fibonacci from the high to the low of a move, for me this move starts here and it ends here. You could also say it ended here, but it already kind of started retracing in my opinion there. Now notice this green bar here. We could have actually placed, if this were live time, we could have placed a Fibonacci level here after this green bar and anticipated coming into this 5618 area. However, it actually didn't, so I just moved the Fibonacci level a bit lower. So this is where I would have placed it. I would have used a box just to indicate this 5618 area, and this would act as support and resistance going forward. Now, luckily enough, again, I didn't I really didn't take this chart from the start. I'm just looking at price and seeing where Fibonacci's did work out. So here it actually did work out. You can clearly see it acted as support and resistance. And that's all I want to show. Is like, scarily enough, often in this area do you see price reverse, but again, it's not about the reversal itself, it's about the information that you can get from this area. I would generally then delete this area because it just takes a lot of space on my chart, and use this going forward until it either reverses or breaks, or until I place a new Fibonacci level. Alright, so looking at this chart, it does look like here it could be another retracement. Fibonacci works really well in trending markets, as you can see. So from here, the move, for me, it ended here, even with this small bounce. So I would place the low of the Fibonacci down here. I would place a box in this 5618 area, and again, luckily enough, it actually does show that it sort of found resistance in this area. Another quick thing to mention, also, it looks like there's confluence here. We see sort of an area of support and resistance here, and that is with confluence of the 61850 area of the Fibonacci, and that makes it even stronger. So use these tools in combination with each other. The more the better. If one isn't there, that is okay, but the more the better, and will increase the likelihood of your trade succeeding, or as a stop loss placement, or as a target. So you saw we had small Fibonacci retracements. Oh my goodness, I think this is another one even, sort of. We have smaller Fibonacci retracements in the trend itself. That's what I talked about, the zigzags. price moves in zigzags, and Fibonacci helps quite a bit with determining the zags. Alright, but you can also use them on bigger moves. So we have a clear down move up until here, and as soon as this high was broken, we don't have lower highs and lower lows anymore. It looks like the trend has stopped. Maybe it hasn't, but it does look like it as soon as this high here was broken. So we could draw a Fibonacci, a large one, from the top of the move to the bottom of the move, and draw again a 5618 area. And scary enough, again, it doesn't always work out this nicely, I must just say. We did see here resistance coming into play. If this now is in confluence with another support and resistance area, that is even better. So for example, we have a bounce here, we have a bounce here, some stalling there. Honestly, I haven't looked at this chart yet. I haven't placed my support and resistance areas, but you can clearly see that it did find some resistance here. Going forward, I will definitely have a look at this area again. Maybe we find a reversal for the continuation of this trend. Alright, that is all I wanted to share with Fibonacci and trend lines. I hope that helps, clears up the nuances a little bit. And yes, chat to you soon. Bye bye.